6.8%, that was the inflation reading for July. Let's hear our Montek Singh Ahluwalia reacting to those numbers.
No, sir, we were also actually waiting for you at Yojana Bhavan.
Oh, so me talking to you here saved me. Yeah, tell me, what do you want to know?
Sir, the headline inflation numbers are out 6.87.
Yes.
It's a little dip, but do you expect this trend to continue?
Well, I'm not making forecasts. I think the dip is welcome, quite clearly. But inflation is still above what I've always said is our comfort level. I think in the Finance Ministry may have a different view, but in the Planning Commission, what we've said always is that 5 to 6% is sort of a tolerable level of inflation. I know that the RBI would have an even lower number. And since it's above 6%, I would only say that the dipping is welcome. I hope that that's a trend. Of course, you can never predict what will happen in the next 3-4 months, but it's not yet at a level where one can say that it has entered the comfort zone.
So also the trade data came out today. The exports are down by a huge margin. Is that something that is worrying?
I think the whole global economic situation should be a cause of worry to everybody. The global economy is not looking good. The prospects for Europe, for example, in the current year are something like zero growth with negative in some countries. So I think all countries, certainly including India, in the current year, we are facing a global environment that is not supported. Now, this is a short-term phenomenon, and I think one can cope with ups and downs, but it does pose a challenge, and it is an issue of concern.
Sir, with the exports down, industrial production having...
Montek Singh Ahluwalia reacting to the inflation number, the WPI inflation number for July, which is coming at 6.87%. A little lower than what we were expecting. The ET Now poll was throwing up a number of 7%. But let's stay with the subject of WPI inflation. Go across to Shubhda Rao, Chief Economist at Yes Bank, to get a sense from her as to what she makes of those numbers. Shubhda, 6.87%. Would you cheer that number, or would you focus on the core inflation number, which has been disappointing?
I think I would concentrate on core. While the headline is quite clearly sub 7%, more or less in line with what we were expecting at 7.07, it's the internals which do not provide much comfort. Particularly, there are two factors that we would like to discuss. One is the unexplained decline in the non-administered fuel prices. For the month of July, the decline has been in the ATF, naphtha, bitumen, light-speed diesel, etc., ranging between 4 to 10%. Whereas if you look at the global crude prices, be it in dollar terms, which rose by 6%, or be it in rupee terms, which rose by 5%, so that is a bit contrarian to what was happening to the global crude prices and what has been shown in the domestic prices of fuel. That remains a little bit unexplained in the current data of July. The second point of discomfort, and which I would think is slightly more serious, is the trajectory for core. Core has touched a 5.44%, clearly not a point of comfort for the Reserve Bank of India. If you look at the seasonally adjusted month-over-month jump in core, it has been as high as 0.8%, which is almost, I would think, about 8-month high. Not a very comforting picture as far as the policy making is concerned. So we do have, from here on, if I were to look at the trajectory for inflation, the risks remain on the upside, with the impact of drought, may not be on all crops, but at least on pulses and oilseeds, the price pressures will prevail. If you look at the impending fuel price revision, which may or may not happen, but the risk would remain of that. So the risk on inflation is going to remain on upside, with an average that we believe would be 7.5 to 8%, but given the current trend, probably likely closer to 8%, which is a point of worry as far as RBI has been, talking about for some time now. In fact, as recent as yesterday, the governor did once again sound his concerns on the persistent, sticky, high inflation, and that is really playing out at this point in time. There are downside risks to growth, no doubt about it. If you look at the impact of drought on agriculture output, or if you look at the current series of industrial production, not just the industrial production data, which is a bit noisy, but if you look at high frequency proximate variables, be it on cellular connections, be it on, freight, or you see the PMI, or you see the non-oil, non-gold imports, notwithstanding today's data, proxy variables do seem to show a downside risk to growth. With all probability, growth may come in between 5 to 5.5% for the first quarter. So for RBI, the policy concerns remain heightened, concerned. But all I would like to submit at this point in time is probably another quarter or two of 5.5% growth or below. Growth may not be completely off the radar for the Reserve Bank of India.
Just wanted to get your perspective as to where this number would leave the Reserve Bank of India.
That's exactly the point I was making, that for RBI, the upside risks to inflation continuing and the downside risks to growth now emerging in terms of higher probability. If the August 31st data on first quarter GDP does indeed come between 5 to 5.5, that would be 2 successive quarters below 5.5% growth. Not a very comforting sign. A lower growth has its implications on the government's fisc also in terms of lower tax revenues and so on. Quite clearly, the dilemma will continue. We need to see all the positive statements having come out from Delhi in recent weeks to get into action mode quite quickly. Perhaps that would provide some comfort for the RBI to take cues that now the process of fiscal consolidation is taking off the ground in a meaningful manner. May give some comfort to RBI, but it could be anybody's guess whether RBI looks at it as early as on September 17th or waits until October to even consider monetary easing. So all eyes on what the ground situation is in terms of implementation of all the positive comments coming out quite recently. But as far as inflation and growth risks are concerned, both remain on the upside and the downside respectively.
Okay, Shubhda, we'll leave it at that. Thanks very much for joining in with your perspective on the inflation reading. NACO numbers out on your screen. Profits have come in at 223 crore rupees, and that's below what the street was expecting at 260 crores. Top line too at 1,720 crores, which has surpassed the ET Now expectation of 1,650. So once again, if you can see that it's on the bottom line that they've disappointed, but come in with a healthy number for their top line growth. The stock price, though, deep in the red. But we wrap it up right here on Market Sense. Prakash, thanks very much for taking the time out and joining in with that technical perspective. Timed out right here on Market Sense. Markets at lunch up.